Hi, and welcome to another daily recap. So, today I'm going to recap November 29, 2024, and it's Friday. So, this is uh, so let me zoom in to into the daily chart of the euro dollar. And before that, I just want to say that I didn't get any trades on both EU as well as GU. I know that I'm on a drought, getting no trades, but the key here is the patience and not take any irrational trades. So today I almost got a trade, but the game plan was very simple. All I want to say is a bit of price action to be played out, but the price action didn't play out and the expectation from the New York session didn't happen. So that's why I didn't get any trades on this day. So anyway, let's jump into the charts and see what happened on this day and why I didn't get any trades on both EU as well as GU. So starting off with EU from the daily perspective, the swing structure is bearish. The internal is also bearish. Zooming in, you can see that the price has swept the sell side liquidity and it has made multiple mitigations into the daily supply, which might indicate that this supply might fail and this strong internal high can be taken out. Why? Price has mitigated a strong daily demand and with a strong rejection, and with the sell side liquidity sweep, I can expect the price to push further up to take out the strong internal high. But still, my daily bias is neutral. Why? Because of this bullish momentum, and the price is still in the daily supply and it did not flip the daily supply. If the price had flipped the daily supply, then I would be so much confident that the price will continue going up, but still the supply is holding, and this supply is also formed via sweep of liquidity. So this is also high probability supply, so this can hold at any time and then push the price down. That's why I'm not jumping into immediate conclusions with the current price action. So this is the 4-hour chart. Here you can see the swing structure is bearish and internal is also bearish, and the price has reached the extreme supply of this internal range. Now anytime the price can push down to take out the weak internal low. So here you can see the price has mitigated the extreme supply, and but the thing here is it had just took out the sell side liquidity and I chalk bullish. So this is actually the chalk bearish line and this is the chalk bullish line, but internally within this fractal structure price at high chalked bullish, which means that the price can push further up today also and then take out the strong internal high. That's also a possible chance, but still my bias for the 4-hour is also neutral. Why? Because price is in the premium prices and the internal order flow is bearish and the price has mitigated the extreme supply. So anytime the price can chalk bearish and then continue the run phase and take out the weak internal low. And why I'm also favoring the buys is that because of the bullish order flow as well as the bullish wick, and also the price has swept the sell side liquidity and then I chalk bullish. So because of these points I am favoring buys, and because of these points I am favoring sells. So you can't just be biased with buys or sells. You must have points for both buys as well as sells, a narrative for both longs as well as shorts. That's why you can build a narrative and then take trades with confidence without any FOMO or FOL. So another advantage of having a narrative is that once you place the trade, then you will not reanalyze the trade and then get into some kind of fear and then cancel the trade before it reaches your take profit or before the stop loss is hit. The thing here is you must have a narrative and trust your narrative ability, and it will definitely play out in a random distribution. So that's how market works. So this is H1 chart. The swing structure is bearish, the internal is bullish. Zooming in, here you can see the price has swept the sell side liquidity, mitigated into the H1 demand, and then the bullish order flow has kicked in. Now the price can take out the weak internal high. So this is the only unmitigated demand which the price can mitigate into and then push the price up to take out the weak internal low. If this demand fails, then I'll be confident that the price will take all of the sell side liquidities, and obviously price can come down to take out the weak swing low which is below here. Which weak swing low which is below here. So that's a different story, but for now what I can do is I can look to continue the bullish order flow and then target the strong swing high. Why? Because I'm not just trading randomly. In the daily time frame, if you recall, the price had tapped into the high probability daily demand with a strong rejection, and the price can push further up. So there is a chance in the daily time frame for the price to go up. That's why I'm taking longs in the H1 time frame, though it is counter swing structure. And also the price had mitigated into the premium prices of the swing range. Even after these conditions, I'm taking longs because I'm having support from the daily time frame. That's why high time frame narrative building is very much important for your trades. So actually this is phase C, and price is not in non-only region, definitely not, because price is strictly in the premium prices. And high time frame supporting the idea, yes, definitely. And MTF POI has 4 out of 8 criteria met, and yes, they are meeting 5 out of 8 criteria. So this box is also ticked, and in line with the medium time frame order flow, yes, it is. So 3 out of 4 boxes are ticked, which means almost 75% of win rate. That's fine for me. What are the other confluences? Supply chain is being respected, and then they have a structural target, which is the strong swing high. And what are the other risk factors? Price is in the 4-hour supply still. The 4-hour supply can hold and push the price down at any time, and there is no time based liquidity to target except this previous day's high. So what is the entry method? There is no inducement, so the only thing that I can do is wait for an pullback inducement to occur, or wait for the price to do a confirmation entry and then take the trade using the mitigation candle. At 8:06 GMT plus 1, I cancel the trade because of this candle. This one candle made me cancel the trade. Why? Because the price had liquidated the weak internal high, which means that the supply may have entered the market and they can push the price down to take out all the low resistance liquidity lying below. So all I must look for is wait for this POI to fail, because once this POI gets flipped, then I can look for shorts from this flip zone. As expected, this POI got failed, and this was the POI that I marked, and this POI got failed. Thus I can look for shorts from this flip zone. So this is actually the flip zone, but this is the POI that is extreme. So I could use the liquidity from this flip zone as inducement, and once the price takes out this lid, I can look for shorts, but that didn't happen, and there was a new lid formed here. So there was a new lid formed. So I was expecting the price to take out this lid and mitigate into this POI so that I can look for shorts, but that didn't happen actually. So this was actually the M15 time frame. So I was waiting for the price to take out the leg inducement and then push the price down. Rather, a ton of low resistance liquidity was being built up. So what happened after this? The price took out all the low resistance liquidity that was being built up and mitigated into the H1 supply. So now once the price took out all the buy side liquidity and mitigated into the high probability POI, now it can come down to take out all the sell side liquidities below. So I expected this price action to happen within the New York session, but the thing here is, during the New York session, the market, the big financial institutions engineer buy side liquidity, and during the lull period they took all the buy side liquidity. Probably tomorrow they can rally down and take out all the sells and liquidities below. So that's a luck. Whether I'll get a trade tomorrow or not, that's a different story. But for today, I didn't get any trades on this day. So jumping into GU, into the daily time frame, the swing structure is bullish. The internal is also bullish, which means that is the phase A in the daily structure. So now we are having a clear POI with a sweep of liquidity and an inducement. So this is a very high probability POI from which the price can bounce off and continue the bullish order flow. And yeah, one more thing is that the longs are also high probability because there is this fair value gap, and which means that this can act as a buy side liquidity. So I can look for longs targeting this buy side liquidity. And this is the 4-hour chart. The swing structure is bearish, internal is bullish, and this is a strong internal low. And let's see in the zoomed in version. So yeah, price add mitigated into the 4-hour supply, thus I can expect some reaction from this 4-hour supply and push the price down into this demand zone, which means the shorts are also valid apart from longs from the daily perspective. So both shorts and longs are valid. So whichever direction the H1 is moving, so I'll be looking to trade from that direction. This is H1. The swing structure is bullish and the internal is also bullish, but the price add mitigated into the 4-hour supply, which means now phase D shorts are now valid. And now I'm also having some clear sells and liquidities that I can target. The first one being this low, and second one being the Asian lows, and third one being the 4-hour demand zone. So all I need to do is wait for the price to chalk bearish, then I can look for shorts. Actually priced at chalk bearish, so this is the lid, and I wanted the price to take out this buy side liquidity, mitigate into this POI and then push down. But unfortunately the New York was just a piece of consolidation. It did not take out the buy side liquidity, and the real buy side liquidation happened during the price did not even bother to take out the buy side liquidity. Price just chalk bearish and then it continued bearish structure and mitigated into the 4-hour demand, and it then chalked bullish. So once the price chalked bullish, then I can look for phase B longs, which was out of my trading session. So here is the POI, which I can look for longs, and once the price chalked bullish, price pull back and then push the price up. So phase B longs were valid, but I didn't take this one because it was out of the session, and even if it was inside the session, I would have not taken it because there was no entry model in the M15, so I would have not taken this trade anyways. So yeah, there is no M15 chart for that one because I didn't bother to analyze this trade. But anyway, it is what it is. I didn't get any trades on this day because what I expected actually played out, but it played out late out of the session. So I can't sit out of the session during my personal time. So as I already told you, we must fit trading into our lifestyle and we must not fit our lifestyle into the tradings. So that is definitely not the way that you trade. That will cause burnout and you will hate trading. So yeah, that's it from my side. So there is no trades on both EU and as well as GU. And also for the past around 7 to 8 trading days, I didn't get any trades. The key here is patience, not to take irrational trades, and just keep those emotions subtle and just play with the objective, the market structure, the liquidity, and those objectives that I have in my playbook. So yeah, that's it from my side. See you guys on the next day. Until then, cheers guys. Bye.